Good morning and welcome to the Killik and Co-Market Updates. This week, the Bank of England has cut its base rate from 4.75% down to 4.5%. Here's the 10-year chart showing how rates have declined since that peak of 5.25% in 2023. However, the comments from the Monetary Policy Committee and the Monetary Policy Report that was published this week make it clear that the bank is in a very difficult position right now. The bank described inflation as somewhat elevated and economic growth as weaker than expected. The cure for inflation is higher interest rates, but the cure for low growth is lower interest rates, so the bank is facing a difficult balancing act. Here are the bank's latest inflation projections. The green line shows the headline rate of CPI and the orange line shows CPI excluding energy costs. If you look at the green line, you will see the bank is now expecting inflation to rise towards 4% this year. There are a few reasons for this. One, as we've mentioned a few times in recent videos, is the inflationary impact of the autumn budget. A lot of extra costs have been piled onto businesses, and these are likely to lead to higher prices. The second is an increase in water bills. It was announced this week that the average water bill will be rising by 26% this year, and that is the highest increase since the industry was privatized 36 years ago. The third is an increase in gas prices. This chart shows spot gas prices and gas futures prices. The spot gas price shows what you would pay if you wanted gas for immediate delivery. The futures price shows what you would have to pay to secure delivery of gas on a future date. You can see that oil prices spiked noticeably after Russia's invasion of Ukraine. Futures prices were measured in November 2022, shown by the orange line, again in November 2024, shown by the yellow line, and again this month, shown by the purple. The purple line is above the yellow line, which has led to a higher inflation projection from the Bank of England. It is hoped that the rise in gas prices will be temporary, caused by the ending of a gas transit agreement between Russia and Ukraine, as well as the current spate of cold weather. In other news this week, the FTSE 100 has hit a new record closing high of over 8,700. Here's the 10-year chart. Although the FTSE is seen as the UK's main stock index, it doesn't actually say a huge amount about the UK economy. Most of the companies in it are international in nature, and they earn a lot of their revenue overseas. So that's why it's possible for the FTSE 100 to be high, while the rate of UK economic growth might not be that high. AstraZeneca is currently the largest company in the FTSE 100. The company released a good set of results this week, and the shares rose 5% on the day, and that was enough to push the index to its record level. However, currency is the main reason for the longer-term rise in the index. Sterling has been weakening over the last decade. Here it is against the dollar. Most of the companies in the FTSE 100 earn a lot of their revenue in dollars. These dollars are converted back to sterling to calculate the profit numbers, and when sterling is weaker, the companies appear to be more profitable in sterling terms, and their share prices are likely to rise. Another factor leading to higher markets this week was the postponement of the new tariffs that the US had planned to impose on Canada and Mexico. The US had planned to apply tariffs of 25% from this week, the news of which caused global markets to drop. But the tariffs were unexpectedly postponed by a month, and that led to a bit of a relief rally in global markets. Shares in companies that are viewed as being particularly exposed to the tariffs were the most impacted. Here's Canadian Pacific, a railway operator that transports goods between the US, Canada, and Mexico. The shares dropped over 6% on the day the tariffs were announced, but have since recovered much of that loss. The global MSCI World Index followed a similar pattern. The fact that Trump was willing to postpone the threatened tariffs so quickly suggests that he's just using the threat as a negotiating tactic, but he is difficult to predict, so we'll be keeping a close eye on the situation. And lastly, Spotify deserves a mention this week after reporting its first annual profit since listing on the stock exchange in 2018. Here's the chart. There was initially a lot of hype about the company after the IPO. The shares performed very poorly in 2022 when interest rates started rising. Investors lost their appetite for risk and sold shares in so-called high-growth companies that were not yet profitable. However, the shares have recovered very nicely over the last couple of years, and they've moved higher this week after reporting a profit for 2024. So do give us a call if you'd like to talk about this company in more detail. Moving on to have a look at next week, we've got a real mix of different companies reporting, starting with McDonald's, BP and Marriott. That's it from us. Have a great weekend, and we'll see you next Friday.